Hey guys, thanks for tuning in. In this video, we're going to be taking a look at a due diligence report for Vanda Pharmaceuticals, NASDAQ VNDA. Now before we start, this video is not a recommendation to buy or sell this stock. This is for entertainment purposes only, and we do have some positions in this. Vanda is a biopharmaceutical company focused on developing and commercializing therapies for central nervous system disorders and other conditions with unmet medical needs. Its commercial portfolio currently includes Fanapt for schizophrenia and bipolar I disorder and HETLIOZ for sleep-related disorders. The company is also advancing a pipeline that includes late-stage candidates such as Bysanti or milsaperidone and tradipitant for gastroparesis and motion sickness. Let's take a quick snapshot of the company's financials. In Q1 2025, Vanda reported revenues of $50 million, which represents a modest year-over-year increase, but it's actually below the company's own internal expectations. For the same period, the company reported a net loss of $29.5 million, which is significantly higher than the $4.1 million reported in the prior year. Gross margin came in at approximately 94%. As of mid-2024, the company had around $387 million in cash, providing a strong liquidity cushion. The company currently has a market capitalization of roughly $273 million and an EPS of 29 cents. Looking at the company's guidance, they are projecting revenues between $210 million and $250 million for 2025. This target hinges on several factors, including successful new product launches and advancements in the company's pipeline, specifically mentioning Bysanti and tradipitant. The midpoint of this range implies a 10% year-over-year increase, which seems achievable given the company's solid commercial foundation and upcoming catalysts. In the first scenario, we'll assume the company achieves 100% of its target. This would imply revenues of $230 million, representing a 6% to 26% increase over 2020 for revenues. Achieving this range would suggest successful execution of launch strategies, possible market expansion, and increased investor confidence in the company's commercial capabilities. This would allow Vanda to reinvest funds into research and development, potentially accelerating future growth initiatives. In the second scenario, we'll assume the company achieves 50% of its target, which would imply revenues of $115 million. This suggests a significant shortfall due to delayed approvals, weaker than expected market uptake, or operational inefficiencies. This outcome may lead to budget tightening, downsizing of development plans, and reduced investor sentiment, potentially threatening the company's midterm liquidity if the burn rate remains elevated. It's important to note that there are risks associated with this investment. These include regulatory delays, which could impact product timelines and near-term revenues. The company's products face competition from generic alternatives and rival therapies, which could erode market share and pricing power. There are execution risks associated with new product launches, including challenges related to adoption, reimbursement, pricing, and supply chain constraints. Additionally, if the company continues to report operating losses, it could erode cash reserves if revenues don't scale quickly enough. Now, in conclusion, Vanda Pharmaceuticals is in a critical growth phase where it is looking to leverage its current assets and pipeline to drive meaningful revenue in 2025. With strong gross margins and a robust cash position, the company is well-positioned to weather short-term volatility. However, its ability to meet its ambitious revenue target will hinge on flawless execution, favorable regulatory outcomes, and a competitive product offering. Thank you for watching, and we'll see you in the next one.